This week on Chart This, Gary Wagner takes a look at the return of the Chinese from their Lunar New Year, as well as Janet Yellen's first speech in front of House and Senate. Coming up. And with me now is Gary Wagner. Gary, thanks for joining us today.
My pleasure as always.
All right, Gary, let's start off with China. They are back from their Lunar New Year holiday. What kind of effect will they have on gold this week?
Well, it could, but I think if it does, just very, very slightly. Unlike India, that has gold deeply ingrained in terms of gift giving during festivals, dowries during weddings, what tends to happen in China is things relatively shut down during their New Year. So you're not going to have the same kind of activity. But unlike India, you don't have the seasonal or holiday tendencies. So you might see a return to normal, and a return to normal is simply going to be how it was prior to the New Year.
All right, let's move on to Janet Yellen. She'll be speaking this week for the first time in front of House and Senate. Now, what kind of effect do you think this will have on markets moving forward?
Well, of course, everyone will be looking closely and listening closely to any clues in terms of how she might handle her new position as chairperson of the Federal Reserve. But if you recall, last week's job report came in weaker than expected. And they have begun their tapering program. I believe this month is month number 2. We've now moved down from 85 billion down to about 65 billion in monthly asset purchases. That's still considerable. And my sense is that she's going to want everyone to see a very, very transparent and smooth transition from Bernanke to herself in terms of the power moving from one Fed Reserve chairman to the other. So I would look for, if anything, a vote of confidence in terms of stability to be her overall theme, and for her to reiterate that the Fed is on course and doing what they had planned to do.
All right, Gary, let's get back to gold now. In your insert from last week, you showed us a rally from last year between 1186 and 1435. Now, do you see the same thing sort of happening right now?
Well, absolutely have some bullish signs. However, I do have to say that the follow-through I had hoped to see last week did not appear. But here's what we do know. First of all, we have had a concrete bottom at roughly 1181 to 1185. That double bottom that we had was what signaled the rally that we're speaking about last year. That's where it began from. So the first clue that we have is the fact that we've gotten this double bottom. Each time the market has been to this point, it's rallied off that. Now, the next thing that really has to happen for us to further believe that this is a model that we should effectively look at for future pricing is the long-standing resistance line that we've talked about on the last couple of the inserts. The fact is that we did break above that long-standing resistance line. However, we did not get any strong follow-through buying from there. And what we have seen is a slow succession to higher prices and not really a dramatic breakout, as I hoped we might see once we went and broke above that resistance line. So it is a little bit too early to tell in a definitive manner if we can have the energy to make it, to 1400 again. However, the signs that we look for are appearing. We just need further confirmation.
Excellent stuff, Gary. Let's see what you got for us today.
Yes, on today's insert, we're going to be carrying on where we left off, and we're talking about that long-standing resistance line. I'll also look at recent support and resistance levels that traders as well as investors should keep their eye on in terms of having any kind of evidence that this rally will continue and that we'll see the market move higher.
Good stuff, Gary. Let's bring it over to your charts now.
Hello, Chart This viewers. On today's show, and I'm really excited about it, not only the show, but the bonus content. Last week, I did about an hour and 15-minute live webinar. Has been recorded, and it is available to the Chart This membership, the viewers of Chart This that have signed up. We'll talk about that at the end of the insert. Trading right now, it is Sunday afternoon here in Honolulu, Hawaii, which means that the week has started in Australia, moving into Hong Kong. And so far, the market has been trading in a fairly narrow range, down $1 to about up $2. You can see our current print is $12.69. The bid, the ask is going to be $1 above that, so $12.70. And the topic that we have been really honing in on over the last few shows has been the long-standing resistance line, because my belief, of course, is if we break this long-standing resistance line, it is signaling one of the two models in terms of the way and our current outlook on the market, and drastically changes it. The two models that we have are basically diametrically opposed, and they're basically as follows. Our sense was, in terms of our current Elliott wave count, that if in fact the market came up and stalled and then it would probably begin to go down and even possibly make a new low, because we would still be deeply ingrained in the fifth wave of the fifth wave. We're looking at our weekly chart, so we don't have the sub count here. I'll put that up in a second. But suffice it to say, at this point, at least on a very, very tentative basis, it absolutely appears, as we look at this, you can see that the market is trading above this long-standing resistance line. However, it really almost depends on where you draw it. I'm pegging it from these three highs here. It's a little bit above, so we're still kind of almost at that point, but we can genuinely say a couple of things about this market. The first thing that we can absolutely say with absolute certainty is this double bottom. The double bottom that we had, of course, the first time the market traded below 1200 but to 1181 was its dramatic fall from grace, what we're labeling as our long third wave on our bear count, and that would be this wave right here. And that's the first time we hit that record low. Of course, the market hadn't traded that low since its dramatic rise, and that rise itself was tremendous. We had the final parabolic move up, and then, of course, we had a series of tops terminated by this triple top before the market came down. Second time it hit it was just recently, towards the end of last year, beginning of this year, and we've really had a rally because the market has come off of the low of approximately, call it 1186, and we're trading, call it 1270, so we're just a couple of dollars shy, really, of the double bottom, but really a couple of dollars shy of $100 move to the upside. And the reason that is really so important to me is it really gives us some decent technical evidence that in fact what we could be witnessing and have witnessed, let's go ahead and blow this up, is that bear market truncation or fifth wave truncation that we have been speaking about over the last couple of weeks. And here's what I mean. As this market comes down, we believe we've completed wave 3. Go into wave 4 and we have our 5 count. A, B, and a C you'll get on the 5 count. Now, on the way down, you would typically get a 5 count, and we have identified wave 1 of 5, wave 2 of 5. 3 of 5, however, was that double bottom. And then the question was, have we terminated it? Because on a bear market truncation, what happens is you get this very, very truncated fifth wave, and then you go and begin your corrective period in a bear count, which would be really an ABC, and an ABC would be an ABC to the upside. You have your A, your B, and then your C. We've talked about where I think that this market could go, in fact, if we did get that particular market move, and roughly I'm looking in terms of different areas, 1350, of course, and I'm simply looking at these tops here, and 1345. Those would be the upper levels that I would look at for the completion of the ABC. And of course, if this model is what we're witnessing unfolding, we're going to see our A, we're going to get a dip, and then we're going to get our final C. If the market is still in a bear count, then we would then resume to 1, 2, 3, 4, 5 moving down. However, you have to realize that a bear market and a bull market can change at any time, and that's going to be based on fundamental data. And if we get a fundamental shift, then we're going to get a different count because we go back into the bull count. But whether it's a bull or bear count is obviously determined by market sentiment, and we'll have to see where market sentiment takes us to. You know, on many occasions I've talked to you about the power of Fibonacci. And for those of you that are interested in really diving into this topic a lot deeper, we do have available for you the recorded live webinar that I did last week. It really will give you my outlook for 2014. It will also give you some background as to how I developed this system. And really, this system, more than anything else, the one that I use is based on candlesticks and, of course, Elliott Wave. But Elliott Wave is predominantly a way to look at Fibonacci ratios, and I go into that fairly deep. I'll talk to you about that in a second in terms of how to log on and actually view that. But we're looking at a 3-day chart, standard candlestick format with nothing but fib retracements. If we go from this to really when the market's trading just under 400, you have these couple of rallies, but you get this real peak here, and you can see this peak because this is really the first time that the market genuinely hit $1,000 and then began to back off. So I have one fib retracement from here to here, and the retracement itself, if you look at a 50% retracement, that is the 703. So the market moves up and then retraces roughly 50% from this move. And then what I've done is I put in a couple of what are called fib extensions. Now on a fib extension, we simply went from the low to the high. We then moved our starting point really at the point at which the dip concluded. And here's what's interesting. The numbers that we come up with are right here on the side. And so when we look at this, 100% takes us right here. And from this market move, 161 didn't show us what the proper extension was, but 176% extension took us almost to the top because it takes us to 1861. If we then look at the next rally, this rally here, from its beginning to its end, the correction that it had is a 38% retracement. So we've done a fib extension from there. We begin it from this bottom, and lo and behold, we're going to look at a couple of points. One is the 100% level, and then the second point is the 161% extension. So the 161% extension fairly correctly showed us what the top would be. But if you look at this 100%, and this is something that I've been looking at recently because it's so revealing, although we didn't see it at the time, that 100%, which is sitting at around 1535 to 1565, 35 are these lows here, that 100% became this absolute level of support right in here. And when it dropped below there, that's when it really broke and broke hard. We also can see that the 161% here really laid out these series of tops that we had here. So the beauty of Fibonacci is the fact that it is a cycle that we can utilize time and time again to get an incredible amount of information. As I said, I'm really excited about the bonus content that we have to offer this week. It is the recording of a live webinar I did last week. It's very thorough, very complete. It will give you my full forecast for 2014. I should say the updated forecast now that we're into 2014. It will also lay out the Fibonacci details, the Elliott Wave details in great detail. Here are the instructions. When you go to the website, what you'll see on the front page is an area, chart this after the show, where you can actually go and sign up. We have created a members role for the chart this after the show. You will have to be a member. Membership is absolutely 100% free. When you click this, what will happen is it will take you to your sign up page, which is just like this. And all you need to do is click this button, create your username and password, and then you'll be able to log in and view the bonus content for this week. Again, Fibonacci retracement, Fibonacci extensions, candlesticks, and Elliott Wave as they pertain to the current price of gold.
All right, great stuff as usual, Gary. Thanks for stopping by today.
My pleasure as always. I always want to share any knowledge we can with the fine viewers of Chart This. Have a great trading week. We'll talk to you soon. Bye-bye.
And thank you for watching this edition of Chart This. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can follow me on Twitter @Alex_Letourneau. Have a good one.